There is something weird going on. We're going to talk about it. We got to talk about it for crypto. We got to talk about it for stocks. But one thing to know is that of the top 13 public crypto mining companies, basically all of them sold more crypto than they minted in October. The liquidation to production ratio in October was at a high recently of 105%, meaning they sold a little bit more than they actually minted. This is pretty well a U-turn from what we've been used to in crypto. We've actually been used to less than 100% of crypto being minted actually selling. Certainly in July and August and September when we were at 64, 77, and 77%. And you go back, we barely break 100 regularly. Certainly not since the crypto crash of last summer, where we really broke about 375% liquidations. HUD-8 liquidated more than its competitors, but one of the things that I'm noticing in this buying frenzy that's happening, because that's really what this is reminiscent of, right? This chart is reminiscent of a buying enthusiasm that's occurring for Bitcoin. Obviously, we already know there's excitement about the 12 different Bitcoin ETFs. We know we're within the 8-day window for them to be approved at this point. We know today's a holiday or an observed holiday for federal employees, so it ain't going to be today. We know maybe it'll be next week or a few days thereafter, or there's a 90% chance it'll be by January. We already know all that crap. We also already know that there's talk about potentially an Ethereum ETF, which is also creating enthusiasm for the alts. Obviously, Ethereum is your largest alt. The question, though, is will Ethereum actually be approved? Because Ethereum is built more on staking, whereas a Bitcoin is not. And because it provides a yield, potentially it could fall under different quote-unquote regulations that might lead or lead not to an ETF approval. And this is where I'm starting to get a little sussed out. You're seeing almost pure coordination amongst the big institutions that this is it. I mean, you're starting to see NFTs start selling again that were never selling before. All of a sudden, out of nowhere, you're seeing rock NFTs selling for hundreds of thousands of dollars. You're starting to see people like Galaxy Digital's Mike Novogratz saying things like 2024 will be the year of institutional crypto. It'll be the year that everybody, including institutions and governments, get more comfortable with crypto and therefore give it the breathing space it needs to promote massive inflows. You've got the 2024 halving set up for April 2024 with targets of up to $130,000 between April 2024 to late 2025, charting at top of Bitcoin. There are, and that's just potentially a beginning, because then there are people who are like, it's going to go even way higher than that. And so part of me worries, and I don't know, maybe I'm just being too skeptical or too jaded, but part of me is a little sussed out that when we get this kind of institutional interest all of a sudden, what we're potentially actually seeing is institutions that have already propped up BTC positions, and they are doing everything in their power to motivate the mainstream media and influencer marketing to promote the crap out of Bitcoin going into these ETF launches. So that way, I hate to say it, but they could trade out. Yes, that would mean dump. Trade out of BTC and then go into the next big trade. Now, I don't know if that's true, obviously. I'm just suggesting the level of institutional coordination is weird. Obviously, people like Michael Saylor are going to be like, hey, we are doing great. We have $1 billion in unrealized Bitcoin profits now. Oh, given that they now hold Bitcoin worth over 80% of their stock market capitalization of $7.1 billion. Duh, they're going to be pro-Bitcoin. That's okay. But I'm not talking about them. I'm talking about the other ones. Like, for example, JPM. At the same time as this Bitcoin enthusiasm is occurring, JPM's like, hey, did you know we have a JPM Coin? They've actually been working on this in coordination with the Fed for years, by the way, since probably about 2017. But anyway, the JPM Coins is now available to clients to program their accounts by plugging in a set of key conditions enabling them to move funds to cover overdue payments and margin calls. Further down the line, it may help them seize on differences in exchange rates. So, in other words, they're now enabling certain clients to actually use the JPM Coin. It's currently, and in the JPM Coin blockchain, it's currently being used to transfer about $1 billion daily, which is pretty wild. And transactions used to be pretty much close to zero, but now they're actually using this system. And all of this news about the cryptocurrency adoption that all the other institutions are doing all seem to be coming to foot all around the same time. And I just hate to say it, sometimes I just wonder how much of this is just coordinated enthusiasm to set up for some kind of temporary dump after some form of approval actually happens. Now, no guarantees. And that's the thing. That is a bearish POV. Nobody wants to hear that. But what I would say is, in the event that there is a dump, which I kind of think there will be after the BTC ETF approvals, I think the institutions walk out, they give to retail, and then retail gets stuck holding. That's usually how it works. In the event that actually occurs, I think people who look at BTC as a long-term tool aren't going to be phased at all. If anything, maybe you have some money that you kept on the sidelines to buy any kind of post-ETF dip. That's all I would potentially suggest considering if you are a BTC enthusiast, mostly because, again, the level of this coordination seems odd. And I mean, it's obvious, right? Like, it's obvious. People are like, oh, yeah, it's going to be great. It's going to be the catalyst that enables institutional investing. And if we get 2% of people flowing money into BTC of all the $200 trillion of institutional assets that exist, that's going to 3x the value of BTC. Sure. There are estimates like this all day long, all over the place. There's no shortage of somebody saying something good. I'm just providing a little bit of a, this seems really coordinated all of a sudden. It's just a little bit of healthy skepticism. That's it. It's kind of like when I was complaining about stable coins in January of 2021. People were pissed. People were pissed that I was complaining about stable coins way that early, suggesting, I don't know where they're getting these yields from, but if something breaks, it's not going to be good. And then sure enough, we had the Terra Luna collapse and blah, blah, blah. That led to the bankruptcies of Celsius, FTX, Voyager, BlockFi. I mean, a disaster in the crypto ecosystem. Anyway, that is now mostly behind us, which is good. There's also, of course, the idea of the short squeeze occurring now. This makes, of course, sense that institutions would also likely exit their shorts prior to a Bitcoin ETF approval. I wouldn't be surprised for them to reload those shorts the moment that approval happens. Like, you get approval, you see the line go up, give it 20 minutes max. I think it starts going, like, BTC starts falling. Again, temporarily. I don't know how low. I mean, we could speculate on it, but it's just something that's sussing me out a little bit. Now, we are 1 minute from the closing bell here. I would say probably at the very least retrace back to 37K. I don't think we'd go back to 28K. That would be a little extreme. Maybe the temporary support over here at 31. But I don't know that you should expect to immediately go up to 42 or 48,000 just because of the approval. I think that's already being heavily priced in, but we'll see. We'll see. Anyway, stock market is holding firm with positive gains here going into the close for a lot of companies. You've got Tesla up 2%, matching the NASDAQ. Etsy's even up 2%. Enphase is up 3%. Oh my gosh, could it be a bottom? Ooh, don't say that. That'll jinx it. Knock on wood, that's not a jinx. AMD, 4.5%, folks. TSM rallying the entire chip sector today on monthly sales beats, up 6%. Nvidia's up 3%. Disney giving back some of its gains after its earnings report. You've got Google up almost 2%. Palantir, baby! And I just opened a position in that sucker. Nice, 7%. Let's get the bell.
Now, a flattish yield curve is not the worst thing in the world to go in the top five. Well, there are a lot of medals up there on that podium today for good reason. Citi's doing the honors. National recognition of Veterans Month, the U.S. Marine Corps birthday as well, as we honor our men and women in service. Have a great weekend. See you on the other side with Morgan and AC.
Well, there you have it. Session highs into the close.
Look at that. Closing bell on the session highs. Anyway, yeah, really interesting. I mean, we'll see how this evolves, but very, very cool to see Palantir just kill it today. Again, I think this is the best AI software play that is public. There is, in my opinion, no better AI software play than Palantir, with the exception maybe of Tesla, but I consider that more of an autos play. And to me, nobody holds a candle to it. That's public. Obviously, like OpenAI has got some strength. We saw some of these this morning, including what's going on with Purple. You've got Simon Property Group sitting at 115. Let's look at the Russell 2000s. The small caps up about 1%. Some of the small caps, let's take a peek here. We got Matterport sitting at 240. You've got SoFi sitting at just under $7 there, closing up about 1% on the day. So now the question is, how did Treasury yields do, and is that what drove markets higher today? Well, you've got gold back down again, 1939. You've got oil that was actually up 2% today, and Treasury yields mostly unchanged today, which is quite interesting. Jack, that's interesting. Now there's this talk about, or you see some headlines here, T-bill and a chill. T-bill and chill being referred to, hey, just buy your Treasury bills and forget about it. Grab your 2 to 5 year, Treasuries, grab your 10 to 20s. Grab your 6-monthers, whatever you want. Some cool opportunities to just milk those and chill. Mary Daly from the Federal Reserve, she spoke today. San Francisco Fed Reserve president talked about, hey, the news on inflation has been fairly good and we shouldn't dismiss that, but it's too early to declare victory. That could have potentially been one of the catalysts that helped escalate markets today. This idea that, quote unquote, news on inflation has been fairly good. That's actually pretty optimistic, especially since you got deflation being exported out of China. And on top of that, when you look at the economic consumer sentiment data that's come out over this last week, it's horrible. Economic optimism is at the lowest levels we've seen since 2011, which was basically the start of the last 10-year bull run. You've got the University of Michigan sentiment survey this morning came in at 60.4, well below estimates. 1-year inflation expectations and 5-year inflation expectations all came in higher than expected. So should have had pain today, but we rallied right through it today. Maybe it's just a middle finger to the sell-off that we've had. You've got the 5-year break even down another 1 basis point, down at 2.28. That's down from 2.29 this morning. 5-year forward break even, that one is sitting at, nice plummet, 2.34. That's almost in line with the 5-year. That's actually fantastic. Fed term rate basically unchanged to a 5.35, really suggesting that you do not have a real fear of the Fed continuing any kind of, and this is almost not moving. There's almost zero movement in the Federal Reserve's terminal rate expectations right now. Almost zero. Invitae up 11% after dropping like 99.9%. So I don't know if that's something to cheer about. Back to moving up with crypto here. I can't believe Blink Charging actually is doing as well as it is. It beat revenue by like $12 million, but I think this is a terrible company. And I've been bagging on this company more than I've been bagging on Plug. And Plug Power was down 40% today as they potentially talk about not even being able to survive anymore, that they might go bankrupt. So, here you got up in this sort of group of like near bankrupt companies. You next to that have Trade Desk, which is a phenomenal freaking company that missed earnings guidance by 5% and sold off 16%. Meanwhile, they beat on EPS, they beat on revenue numbers. Not only that, we also, what did we get? We got, peek at the earnings call. What do we see in the earnings call? Hey, we think there's a one-time decline in Q4 revenue because of what? Auto strikes and movie strikes. That's it. They're calling it one time. Now, that doesn't mean it is one time, but boy, I think what this was is, hey, you know what? Markets are like, Trade Desk been trading high for too long. Time to sell them down. Give them the Grim Reaper axe. That's the stock market for you. I think there's a lot of institutional trading that goes on in a lot of these securities to just rob people into selling stocks cheaply and screwing them. And that's how people can't build wealth, because they got a paper hand. They got dumb. All right. We've got the billionaire Home Depot co-founder Bernard Marcus backing Donald Trump at the same time as Hawaii's luxury hotel ditching Trump branding to join the Hilton system instead. Wow. Well, that's some people like going to the Trump hotels even more now. It's kind of like, are you really losing? I don't know. Anyway, so what else do we have? Well, I think that basically covers most of it. Trying to see briefly here what else we have on the crypto front. I do think the crypto front is something to be paying attention, or something worth paying attention to, given the potential for some market manipulation here. Wouldn't surprise me. There are some people, though, that are suggesting you could also have this post ETF launch dip. There's one individual who's suggesting you could end up facing a 20% drawdown. It seems like it might be a little bit of a high drawdown there, but we'll see. Very far and few between to actually find somebody bearish on crypto right now. It's hard to actually find anybody that's bearish on anything that's going up, because that would be unpopular. So yeah, getting that perspective sometimes is a little unique. Okay, so we saw the ETF window open yesterday, and I think that's what we got. Let's see what we have here in the chat here, if there's anything here. Vivek on PDD was excellent. Oh, you know what we might have to do is do a reaction video to that. You could always send me videos to react to on Instagram or on Twitter. Follow me there at RealMeetKevin, or Meet Kevin on Twitter, or sorry, Real Meet Kevin on Twitter, Meet Kevin on Instagram. And thank you so much, everybody, for watching. We'll see you soon in the next one. I got to read the quick disclaimer off like right here. Even though I'm a licensed financial advisor, licensed real estate broker, and I'm becoming a stockbroker, this video is neither personalized financial nor real estate advice for you. It's not tax, legal, or otherwise personalized advice tailored to you. Keep in mind, we got the New Burst Pro coupon expiring today. Go to meetkevin.com to check that out, or shadow me. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. Also personally operate an actively managed ETF and hold long positions. Oh, wrong button. That button. And hold long positions in various securities mentioned in this video. However, I have no relationship to any of the issuers other than HouseHack, nor am I presently acting as a market maker. Thanks so much for watching, folks. We will see you soon in the next one. Goodbye, everyone.